UltraTech Cement announces its plan to enter the cables and wires business. The new business foray will require a capex of 1,800 crore rupees over 2 years. The stock corrects 4% on concerns over capital allocation.
Well, UltraTech Cement's foray into the cables and wires business sees incumbent cables and wires makers see a lot of selling pressure on fears of higher competition in the segment. Polycab, KEI Industries, both of them are down close to 15%. RR Cable as well is down more than 10%, while Havells sees a cut of close to around 5%. The stocks are down, however, they've recovered from the low point of the day.
Microfinance lenders, on the other hand, surge as RBI relaxes risk weight requirement for bank loans to NBFCs and microfinance loans by 25%, causing a relief rally in names like Credit Access, Grameen, Shriram Finance, Bandhan Bank, all of them up between 4 to 8%.
Sirma SGS rallies closer around 1.5% to 2% on encouraging guidance. The management tells CNBC-TV18 that they expect to grow at an industry average of around 30-35%, and they're expecting margins to improve from 7% in FY25 to around 7.5% in FY26. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, no big move in the Nifty at all. The Nifty is as flat as can be. The broader markets, they continue to see some selling pressure. But I think the banking names, that's where you're seeing a bit of an outperformance. The RBI's recent accommodative measures are boding well. And that's why that's the index that's up 320 points.
Right above my head, Nigel, but as we speak about the banking space itself, there are sources at the bottom of your screen telling you that UCO Bank may actually now defer its QIP plans. I remember correct, here itself on Chartbusters, after the third quarter results, the management of UCO Bank came by and said 2,000 crore is the enabling provision for the QIP that they have, which will take the government stake down by 3%. More importantly, roadshows were beginning and they were looking to launch their QIP in this quarter itself. But turns out market volatility may have found the QIP guys a little less takers than what the company had anticipated earlier. No big moves on UCO Bank in an otherwise strong day for financials.
Well, that's right, Mangalam. And because of the market conditions, many stocks from the broader markets have seen a big correction from the top. Some of their businesses may pretty much be intact. One such stock is Midani. Mishra Dhatu Nigam. Well, if you look at the stock at the peak was more than 500 rupees, that stock has come down by nearly around half. The company, though, has guided for around 1,000 crores of order inflow in FY25. And also they are guiding for better times because of exposure to defense as well as the space segments. How are things panning out and what is their guidance with regard to the future? We're now joined by Mr. Rao, the chairman and managing director of the company. Hi, Mr. Rao. Good morning and thanks a lot for joining in. Good to have you on the show, sir. Let's focus on a couple of aspects. If I look at your performance as of the 9-month mark, there is barely any growth. But Q4 for you is the seasonally strongest quarter, right? Because bulk of your revenues are registered in that particular quarter. Given that scenario, tell us what you expect to end this year with. That's FY25 on the revenue parameter. On that base for FY26, what kind of growth are you likely to see? And give us your margin guidance. Please go ahead, Mr. Rao.
Okay. See, FY24 is the best year for Midani as we have achieved more than 1,000 crores, 1,072 crores we achieved, which were not there in earlier. But in the same way, if you see from 24 onwards, we are getting order book is booking. Earlier, we are below 1,000 crores. Now we are reaching nearly 2,000 crores. If you see January end, our order book is nearly 2,000 crores. And we are expecting some more orders for the balance period. And as far as turnover is concerned, maybe the turnover is same as last year as our space business has come down. Space orders have completed. New orders we are expecting. So that's why the same turnover is maintained. As you rightly said, Q4 is the very important, crucial quarter for Midani because in any defense industry, Q4 will be the boom. It will be the order book execution will be whatever 9 months executed, more than 60-70% will be executed in 9 months, with 60-70% of that book will be executed in fourth quarter. That means for this year, if you see FY25, we have executed 660 crores for 9 months, whereas for this quarter itself, we expect more than 400 crores. If that comes, definitely Our turnover this year also will surpass the last year. 1072, whatever is there, we are hoping that we will cross it.
So might be positive revenue growth, sir, for this year, flattish year. But as you said, encouraging to see that your order book is 2,000 crores. So what does that mean in terms of execution for FY26? Are you more optimistic on prospects over there? And also, you were just going to tell us about your margin picture. So give us both those.
First, if I talk about the execution for FY26, definitely it will be more, because most of the orders what we got from the naval sector or aerospace, some development orders are there. You know, Midani is the company which is established for development of several grades. So once the grades were developed and successfully established, we will get some more orders, and whatever this is called trial order. After trial order, production order will be there. The trial order is completed, production order will be higher value. Like that, I will get more turnover next year.
So
revenue
how much,
will be more.
How much more will be the turnover next year, sir?
We expect it will be, because I told you today we have 2,000 crores order.
Yes.
2,000 crores order book is there. Another 300 crores we are expecting, including space also. So definitely it will be more than the current FY25.
By how much, sir? Will you do 1,200 crores
How
next
much,
year?
if you ask,
10%.
I can't tell. But it
10% growth is possible, sir, next year? 10% growth?
Easy.
20% is difficult?
Little bit.
Okay, so 15%.
Now, why difficult I am telling? Because the grades have to be established. As I told you, some grades are under development.
Yeah.
Unless the development is completed and it's successful, production cannot be done. Clearance will not be given for production by the customers. So definitely the growth will be there more than 10%. 20% we will try to achieve, but I cannot tell as it is. Coming to margins, see, because of the geopolitical situation world across, in the year 23-24, the raw material prices have gone up. As Mr. Dhatu Nigam Limited, almost all raw materials are to be imported only. It is not available in India. So because of this Russia-Ukraine war, sponge prices have gone up by 50%, nickel prices have gone up. Certain materials, the prices have gone abnormally. But now in the year FY25, it is little bit stabilized. I mean stabilized means it is at a range of some 10% increase over the last year it has come. Due to that reason, our EBITDA margins have gone up for the year FY25. We see last year it is 20%. Now it is 25%. Third quarter is a good quarter where we were able to get good EBITDA. That is two reasons. One is the raw material prices. Second one, see, in Midani, almost all materials will be used virgin materials, and we can use the plant rivets also. Whenever that it is like a scrap. If the plant rivets usage is increased, automatically my margins will increase. That is one. And the third one is yield. Yield is the very, very important thing for the Midani. If the yield improves, my margin improves. So initially I will get the yield of 30 to 40%. If the yield goes up by 45%, my margin goes up. Like that, if yield increases, you know, when materials are produced, when expertise, that is when period goes, automatically yield also goes. We will know what technology, what our PAG has to do, where to improve the melting performance.
Mr. Rao, thank you so much for, explaining to us how this business works and, how your margins are likely to improve as well. Next year, given your optimism of at least 10%, maybe not 20%, analysts will go with around 17 to 18% or 15 to 18% in terms of top line growth. Margins last year were 20%. This year, you're saying will be 25%. Can they improve beyond that next year, FY26? If you could give us a sense of that. And secondly, exports as well. You said exports were close to 67 crore in the last year. You were expecting close to 120 crore this year. With all that's happening geopolitically, next year, what kind of export number can we do?
This year, actually, exports, Midani started exports for the last 3 years only. See, the exports also started, last of OEMs are coming forward to Midani and they are giving the small quantities order. because no OEM gives a bulk order. They will check the performance of the supplier in the initial period because they are sourcing from India. What they will do, either Pratt & Whitney or Airbus or GE or Safran, all these people, they will give for a lesser quantity initially. Go on, they will increase. Today, I have already executed for this year 60 crores, and in my hand, I have 40 crores order, and another 30 crores order I am expecting. So probably I may near 100 crores I will execute this year, near to 100 crores, 80 to 100 crores. Next year, once this order is executed, we are expecting huge orders. Huge in the sense not in thousands, it will be in hundreds only. So definitely we wanted to cross 100 next year, FY26.
FY26, it will be more than 100 crores of exports.
Yes,
and this
yes.
year, you'll reach closer to 100.
Nearly 100.
Very quickly, Mr. Rao, have you heard from the government of India if they want to do any kind of OFS or any kind of selling? They have more than 70% in the company. You have heard, or that's not on the cards?
Earlier, there was a proposal in the year 21, but the government is not mentioning anything. Maybe they might be wait and see. Now, you are aware that Midani share price has gone up to 500, and now it is reached to 260. It is just because of the, this world condition, and all defense sector prices are coming down. It is only maybe it has reached to something which is far low. It is not a correct price. Definitely it will go up because market correction will be there. It all depends on the internationally what is happening.
All right, Mr. Rao, it's good to have you on the show. We'll want to have you more often. We hope to have you at the end of this fiscal year or when you declare your numbers as well. But thanks a lot for joining in, and we look forward to interacting you more often. More than 10% growth for FY26. FY25 will be a flattish year, and they're optimistic that the exports will gradually pick up. For the time being, slip into a short break. But on the other side, we'll focus on the big story. Competition concerns for cables and wires players, they are back. As UltraTech, they have eyed a foray into the space. The management of RR Cable will be joining in on the other side. Don't go anywhere.
The story of this morning has been the cables and wires industry after UltraTech has made their announcement of a foray into this business with an investment of 1,800 crore over the next 2 years. Well, the jury is still out on what UltraTech does, but everyone's very worried about what happens to the cables and wires business because, you know, Aditya Birla Group entering a segment has disrupted the segment. The most recent example of that has been with the paints industry itself. And the stock market tells you that RR Cable down almost 13%, and that's not the only stock. We have a bunch of other stocks as well, the likes of KEI, Havells, Polycab, all of them lower, some off lows, but most of them still sitting with cuts. Rajesh Jain, who's the Chief Financial Officer of RR Cable, now joins in to discuss this itself. Thanks a lot, Mr. Jain, for joining in. And, you know, that's the first question. Mr. Birla, entering the cables and wires space, are you worried about increasing competition in this space? Not from the, new disruptor, but also the incumbents, because everyone will now look to protect their turf. In light of all of this, what happens to your own growth plans and margins?
Thanks for us having on your channel. See, if you see, this is very big industry, and like almost 85-90,000 the industry size was last year, and it is further grown by almost 13 to 15%. And this is such a fragmented industry, and there are not many even unorganized player also. So if a big player comes like this is always a nice move where more strong player will be like get bigger margin of market share. And though it is very like quick reactions from market, and it is very like on negative side market is concerning. But what I see, this is like for players like us, it is good time that we can also have our growth plan intact, and we see good consolidation in market. But it is not that much like disruptive what market is reacting as per me.
No, Mr. Jain, the problem is when the Birla Group went into paints, we know what happened over there. Those stocks were trading at a high multiple of 65, 70 times approximately. From there on, we have seen only competition got, very, very aggressive. Profitability has come under pressure. Now, for a company like you, for the time being, you're saying there is enough space. UltraTech as well can come and be part of the pie. The fear is your growth plans could get altered. Will that be the case? What are the growth plans that you have, say, for the next few years? Industry, as you said, is growing in early teens. And also your profitability, sir, is only at around 6.5% approximately, which could come under pressure with a new player. Your comment on both these two, revenue growth and margins.
Yeah. So first, when we see from like margin point of view, first you need to see that it will take at least like 2 to 3 years to come into production, and again getting a sizable size of production and getting established in market. It may be another journey of 2 to 3 years. So it will altogether like 4 to 5 years minimum to take sizable size, even in this overall industry, which will be like around 1.5 lakhs by FY28 or 29. So that is one vision. And secondly, see, from profitability point of view, it is not about pricing. It is more about the own strength of every company. Every company, if you see, like right now, we have 4 to 5 players, and every one have their own pricing strategy, own market placement, and plant placement. If pricing is the only criteria, then the lowest one will in the industry can have 80-90% of market share. That cannot be possible in any industry. So for me, it seems that whosoever have a good quality, good distribution channel over the years, like even if you see, it takes time of 15-20 years to build that kind of dealer channel, distribution channel. And this is quite different from paint industry also, where you have very limited number of distributor, and but in wire and cable.
So, Mr. Jain,
Yeah.
Mr. Jain, you're saying it's not a threat. What kind of growth can you deliver from here on? And what kind of profitability can you deliver? Because the street is very, very nervous. Your stock price is down 12%, but you're saying that things will be fine. So give us your aspiration then. Industry is likely to grow in early teens. I think it's 80,000 crore industry that goes to 1 lakh plus crore. What about you?
So we will always like aim to grow at the higher end, the higher from the industry growth, and profitability. Of course, since we are at the lower side of the ladder, so we have our own plan to improve and bring into like double-digit margins by the FY28, and that is our ambition for wire and cable industry. And the growth, of course, it should be higher than industry growth.
Mr. Jain, typically what happens when, a large disruptor does enter the industry, and this is something that we've seen in the paint industry as well, while they aim for the top couple of spots, which is what, the Aditya Birla Group has its stated intent as well, to be in leadership positions in, the segments that it operates in. The lower market share participants are either looking for consolidation or looking for sale, etc. Do you think there is a possibility where an offer is made for a company like RR Kabel by any of the existing players or Aditya Birla Group itself, you all would consider sale?
No, I think this is pure guess from your side, but nothing is on board like that, and we are
Not a guess, sir. Not a guess. We're talking about possibilities, sir. Instead of getting into a rumble, is getting into someone is writing a big check and saying, Mr. Jain, we rather give you a good offer. You don't participate in this race. You take the check and move away. Could that be an option?
No, I cannot comment on that right now.
Yeah, sure. No
position to comment on that.
Okay, and again, we reiterate, it's not guesswork, right? In the paint industry as well, while the Birlas entered, everyone was looking at the top two. AkzoNobel decided to fold its operations in India. So that's something that we were, trying to see whether that plays out in an industry like yours as well. But just finally, before we let you go, for the very near term, you have a target of 15% volume growth in the fourth quarter. Next year, you're targeting 15 to 20% sort of volume growth as well. Those are intact with margins around, almost 100-150 basis points improvement that you've been targeting every year. Will that happen at least the next couple of years?
Yeah. Yes, we are on track, and we are focusing on that only. And our focus is how we achieve growth in terms of volumes and value, and improving our profit margin. And this will not be changed by this development.
All right, we take that point and we will obviously keep connecting with you as and when we get more developments in the industry, not just from the Birla side, the incumbents, but also from your end as well. Thank you so much for joining in and giving us your time and explaining to us the situation. For now, you're not worried, but the street seems to be a little worried with the decline of 12.5% in your stock price and that of all the other cable companies as well. Take a short break, come back, focus on the markets, and we will look at individual stocks which are moving around too. When we started the show, the light on my head was green. That was the Nifty bank. And now it's on Nigel's head as well. Nifty and Sensex, both of them in the green. The problem is the middle of the two of us. That's the mid-cap index, which is currently in the red. So that's something that we'll keep an eye out on through the remainder of this day. For now, we'll leave the markets mild green. The mid-cap index in the red. The Nifty bank doing a lot better. With that, let's wrap up on Chartbusters. Trading Hour comes up next.